Hello, everybody. I'm Jeffrey Behmer, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. And if you've been with us for a while, you know what we do here. But for those of you that might come across us as a new video, we look at company earnings each and every week. And we don't just talk about the earnings, we talk about how to profit from earnings, specifically by the use of trading options. So we're looking at the estimated move of a particular stock each and every week right here. So this week, the week of June 30th, 2025, it's a holiday shortened trading week, and the markets close early on Thursday, and then we are closed on Friday. So just 3.5 days worth of trading gives us a very light trading week. We only have 13 stocks that will declare earnings this week. And this is notable because for those that do declare, just this handful of the spotlight will fall on those more than it tends to do. So we're going to go through that and take a look at what's up and coming. And then I'll talk about our trade from last week, our trade for this week, because we do have a trade coming up this week, all right now on Earnings Call. Stay with us. Okay, because we talk about a lot of stocks, don't forget that we have a chapter feature available at the bottom of this. So if you want to jump to a particular stock during the recording, you can do so. But we have a pretty light week coming up, as you see. And I mentioned that we only have 13 stocks declaring overall, and I'm not even looking at all those, okay? Just looking at a handful, probably, 7 or 8 stocks that we're focused on. And these are divided up into, on the left-hand side of the sheet, these are breakout candidates, meaning these stocks have a historical move of greater than 10% through their earnings. All right. Now, on the right-hand side, we have what we determine are quiet stocks, stocks that move typically single digits through their earnings. And believe it or not, some of these can move maybe 2 to 3% through earnings and are great for selling premium going into earnings, because implied volatility gets built up on all of these stocks right before earnings, and it depends on what side of the ledger on. It depends on what type of strategy we use. Okay, so let's get into this a little deeper, and I'll go over that with you. So we're going to begin with our quiet stocks, and let me give you an example. Okay, this is Pfizer. Pfizer does not have earnings this week, but this is an example of a quiet stock. You can see that not only does Pfizer just not move between earnings announcements, but it also moves very little through the actual earnings announcements, as we have those highlighted with the ellipses there. And it's usually just small single-digit moves through the earnings announcement, just not a lot there. So we typically do selling strategies like, say, an iron condor, selling option premium into that, and then capturing the implied volatility crush that occurs after the earnings announcement. All right, so let's take a look. I got 3 stocks for you here on our list for this week, and we're going to start really with MSC there. So we'll jump to the chart and talk about MSC Industrial, which is the symbol, ironically, is MSM and not MSC, but MSM. Okay. What this company does is they deal in metal and hard fasteners and products of that sort. Okay. And they do have earnings coming up on tomorrow, July 1st, before market open. So nice and early in the morning. The average move here is 6%. All right. So this is an $85 stock. We'll probably get a move of $4 to $5 on the particular stock. The last earnings announcement back here in April, this drop the day after earnings, this drop right here, where my crosshairs are, that was a move of just 5.5%. Okay, 5.5%. So right on that average move of 6%. So this would be ideal for selling premium on if you can get it. Okay. Sometimes the market makers are, all the time, they're really good at pricing the options. and you'll find that no matter what strategy you do, your break evens in your trade will match what the option market makers are pricing the options at. Okay, so meaning you might put your break evens for any type of decent premium only 6% away, and well, that's the estimated move, and that wouldn't equal a good trade. But I'll give you an example of a couple of opportunities here in just a moment, specifically one. Okay, so next on our list is Constellation Brands. They have earnings also tomorrow, Tuesday, the 1st of July. Wow, the year is flying by. This will happen after market close. The average move here is less than 5%. And you can see back here the move right after earnings. We have earnings, and then you gap down on the open, and then you rally up, and you're just up, less than 2% on the day, and it's very quiet and stock typically, and it's consolidating right now. So we do expect a little bit of volatility with Constellation Brands, but probably only a 5 or 6% move, and you can usually get some pretty good because this is a $161 stock, $162 stock. Selling an iron condor is really the good way to go, and I do happen to know that right now, as of this morning, you could get your break evens over 8% away from the current price. That is a trade where it would put the odds in your favor. All right. Now, things get interesting with our next candidate here. This is a stock called National Beverage. This is Fizz. And these small and mid cap stocks are a little bit of moving targets. Now, you'll see here in my notes that earnings are no later than July 2nd after market close. And the average move here is on the high end of our scale, but under 9%, okay, is the average move through earnings. Now, the reason why we don't have a specific date is when you have multiple sources that report different dates for the earnings announcement, it's a good idea to go to the company's website, and usually on every company that's publicly traded, they have an investor relations tab. And so I did. I went there, and according to National Beverage, their earnings will be announced no later than July 2nd. So they could happen today, they could happen tomorrow, but they're probably going to happen Wednesday after market close. But we'll see. Just very interesting that they just have not pinpointed. Here we are, the week of their earnings announcement, and they haven't yet pinpointed when that announcement is going to be. Okay, so a quiet move there, and National Beverage is interesting. Unlike Constellation Brands, they stick to seltzers and fizzy drinks, hence the name, the stock symbol FIZZ, Fizz. Okay, and juices and other beverages that are non-alcoholic. So just a little different niche in the market, but decent price, $42, and another stock that is on our quiet list. All right, so that takes us to where the excitement is. This takes us over to our breakout stocks, and breakout stocks are usually where everybody's attention goes because these stocks move. Okay, they historically move double digits. They get the headlines. They're the all-stars of the earnings season, so to speak. Here's an example of Akamai. This is one of the consistent movers. You can see that this thing really moves, not only between earnings announcements, but man, through the earnings announcements, this thing just really moves, and it'll move $10 in a very short period of time. Okay, both up and down. So if you're a stockholder, you need kind of a thicker skin to trade or to invest in Akamai. As a trader, love stocks like this. Okay, gives a lot of opportunity. So let's take a look at our list this week. All right, we start off the week with Progressive or Progress. So sorry, Progress. Okay, Progress Software. This is an AI company, and as you saw on the chart there, Greenbuyer and FranklinCovey. But let's get into the charts here on these. So Progress Software, again, this company is in AI, and they do have earnings today after market close, and the average move here is 12%. All right, now, okay, it could come in at 10%, or it could blow it out and be 18 or 20%. This is an AI. This is in a hot sector right now. There's all sorts of news that comes out um, on these stocks and in this particular industry. So a potential double-digit move for Progress Software, and it'll be fun to see what the results are as early as tomorrow morning, because earnings are tonight after market close, as I mentioned. Okay, now moving on to Greenbrier. This is a rail car manufacturer. If you're not familiar with Greenbrier, they make rail cars and other transportation units like that. This is also a mover. Its historical move is around 13% through earnings. You can see on the last earnings cycle, it started to move before earnings. Then on the earnings date, the stock just dropped down again and then had a reversal. So this thing is a fun stock to trade, and I like it this week because of the quiet pattern here going into the earnings announcement. Usually, when we get this consolidation, it's kind of like ready to break out. Okay, so that has potential to do that, and we will see. Although it is a light trading week, the average move here is about 13%. Okay. And finally, on our abbreviated list this week, we have FranklinCovey. Now, these people, FranklinCovey, I know FranklinCovey because I used to buy their day planners all the time. I used to buy I went from little notebook size to the big 8.5 by 11 size, and right in my calendar. And believe it or not, I collected years of these books, and they had nice little folders you could store them in. And I hated the potential of getting rid of them, because it was like I was throwing away part of my life, about 10 years of my life before I moved to an electronic calendar, right? Well, they're still around and they still do similar things, and they are a mover, okay? Now, this stock is down in the low 20s now. As you can see, it is consolidating, but this stock has an average move right now of 17%. And I priced out the options this morning. They were trading at around, expecting a move of over 15%. That's a little close. I would love to get pricing for a 10 or 11% move when the average move is about 17%. Oh, and the strategy that we do here on these big movers like Progress, Greenbrier, and FranklinCovey, we look for straddles and strangles. Okay, just buying call, buying put, buying call, buying put. That's all we're looking to do here. And same thing on FranklinCovey, which has an average move here of 17%. And we would look for a big move there coming up on Wednesday, the 2nd of July, after market close. Okay. So that is our list. Now, earnings, because we have a light list this week, and again, markets close early on Thursday, we're closed on Friday. Once we get through this, as you can see, the light list here this week, we start picking things up next week, as early as next week. And then the following week, 2 weeks from now, we have the beginning of the next earnings cycle, and we start getting a flood of earnings announcements, starting with the banks like JP Morgan and others. That's 2 weeks from now. But next week, there's some big names, so you'll want to come back next Monday and pay attention as we start gearing up for the next round of earnings season. All right. Now, that doesn't mean that we don't have opportunities. And let me next move on to touching what we did last week. We've been on a great run here on our Monday show. And right now, we're going to look to continue that trend. Last week, we talked about Daktronics, and we were looking at a straddle on Daktronics. Okay. And we were looking at a trade that cost, believe it or not, only $198. Now, straddles can get very expensive. There are some stocks where straddles are $4,000 and $5,000. This one happened to be just $198 per straddle or per strangle, a little cheaper for the strangles. but the straddle gave us the best opportunity for profit. Okay, so how did it do? Well, there's good news, bad news here. The bad news is it had a little bit of whipsaw volatility. It gapped down on the open, which is that big green bar that you see there underneath the earnings triangle. But then it rallied, and it has rallied for a couple of days. And then today, you'll see the little red candle. It has come down just a little bit. But the good news here is that these options don't expire until July 18th. Now, I know this because Daktronics does not have weekly options. They have standardized options that expire on the third Friday of every month. So the only options available were on the 18th. Okay. And so you have Daktronics here. It is still an open position. So it's down just $93 and per straddle. Okay. So we are definitely staying within it and looking to manage the loss. Okay. So right now it's in a bit of an uptrend, even though it's having a little quiet day today. And we will see how that works out. So I'll keep this as an open position, and we'll continue to monitor it over the next couple of weeks and stay with it. But if we get up there above that upper break even, which is at $17, okay, where that light blue line is, then that is our break even, and anything above 17, we can look to take profits on this particular stock. Okay. So if you like what you're kind of hearing and seeing here about the estimated moves and what type of strategy we should do, be sure to like this video and subscribe to our channel to receive alerts each and every week of the show that has just been posted. We do it each and every Monday here right on our channel. So what do I have for you this week? Well, this week I have another trade for you, and this happens to be the Greenbrier Companies, okay? And this is a strangle. Now, I know this because of the black line that you see there. You see the red, the blue, and the green, but the black line is where I'm focused, and you can see the flat bottom there towards price, and that represents a strangle. Options at two different strike prices, that would be a strangle. All right. And notice the nice consolidation pattern. As I mentioned, the last earnings cycle, you can see the volatility around there. And we did go into profit on our previous trade here for Greenbrier. So we're going to do it again. And the good news here is that a couple of things. This is also a relatively low cost trade. I believe it's around $400 or right around that number. And we have options that don't expire until July 18th. So again, no weekly options here. They only have standardized options, which expire the third Friday of each and every month. I just glanced over at another screen. The trade was pricing out right at $400 when I came on air, and still trading there on Greenbrier. So we did strikes at, we essentially straddled the price, okay? But in this case, it's a strangle. So the call slightly above the current strike price, the put just below the current strike price. That creates the strangle. The debit was about $400, and the options don't expire for another 18 days, okay? So that's July 18th expiration is where we're going with that. All right, so that is our show for this week. Listen, I appreciate you dropping by and checking out our channel. We do it once again each and every Monday right here on the channel, and I will come to you next week with a whole new round of earnings and a whole nother opportunity for you to make money from trading earnings announcements. So everyone have a great trading week. Happy 4th of July for those who celebrate it, and I will see you next week. Take care.